when it comes to crossing the generations, nobody's going to have the same experience. We're all going to grow up differently. We're all going to grow up in different environments. It's not even a comparison. And we're going to take the learning of that and bring that with us into the corporate world. But if you just do something for somebody, you take away the benefits that you get out of that struggle, out of trying to figure things out of that learning.
The Digital Banking Podcast is powered by Typhon. Typhon is the creator of Infinia, a dramatically better digital banking platform for community financial institutions, as well as several platform-agnostic, revenue-generating point solutions. Our highly configurable platform and broad ecosystem of third-party partners ensure our entire suite is scalable and extensible to meet the needs of any FI. On our podcast, you will hear host Josh DeTar discuss today's most pressing financial technology topics with seasoned industry experts from every possible discipline.
Your podcast hasn't officially made it until there's ads in it. But this is one you're not going to want to skip past. And, well, if you do, feel free to hit that fast forward 15 seconds button twice. Ever wonder what gives me my energy and enthusiasm during these podcasts? Outside of my relentless desire to learn about, connect, share, and build up community FIs and their mission to support the communities they serve. It's coffee, and lots of it. Now, you want to know what's better than your regular old coffee? How about donating $5 to the Children's Miracle Network hospitals through Credit Unions for Kids every time you purchase high-quality, ethically sourced coffee that also provides living wages to coffee farmers? So if you want to listen to this episode with epic levels of caffeine-induced focus and help kids in need, head to javaforkids.org to learn more and buy a bag or 10. Thanks.
Welcome to another episode of the Digital Banking Podcast. My guest today is Mike Tranum, the CIO at DuPont Community Credit Union. Now, I met Mike at GAC this last year, and 5 minutes into talking to him, I knew I had to have him on the show as a guest, and I think you're going to quickly see why as well. You see, Mike likes snowballs. Let me explain. Mike says he's a pretty simple guy. He likes to build things, and he likes to ski, among some other fun hobbies. So he needs snowballs for skiing, and he likes to see how building something can snowball into something that was never really the plan, but actually ends up being super cool. Example, what started as a Costco purchase of a play structure for the kids that the company couldn't deliver and install during the pandemic quickly snowballed into Mike building a custom, completely enclosed, 18-foot tall rock climbing gym for his kids in the backyard. On the professional side of what began as an IT consulting company he started, snowballed into a company with employees and all that comes with that, which was cool, until he was up at 11 p.m. trying to learn accounting software and QuickBooks to manage the company's books, all while having a new baby in the house. Now, this whole idea of starting with an idea, but not having a rigid plan, is also how Mike found his way into credit unions. Short version of the story. Not paying attention to details, going to a class that was canceled in high school, and then trying to take a nap, snowballed into an introduction to credit union IT through a pen-fed QSO. Fast forward to today, and Mike is still a big fan of leveraging experience and knowledge to create plans and processes, but always wants to be open to what could this snowball into. We've got some really cool topics around member experience, fraud, and how regulation fits into this idea of process is good, but where do you need it to be flexible? Now, Mike starts all his new hire orientations with two simple truths, and I think they're going to come up a lot today too. Number one, machines break. And number two, people are human and make mistakes. So Mike, hey, look, I've been really excited to have you on. So welcome to the Digital Banking Podcast.
Thanks, Josh. Yeah, I've been looking forward to this too. We had a great conversation at GAC, and this seemed like something that'd be fun.
Well, and two, I want to jump right into, we kind of led with this analogy of snowballs, but just in talking to you, I think one of the things I love about just your conversation style is all the different analogies that you use. And I was like, man, we have like 400 analogies that we can talk through in today's episode. But I want to start with this one because it kind of made me chuckle. And it's this concept of, just flying through the sky in a bomb. And for those of you that are listening, what we're alluding to is, this thing called a hot air balloon. And what I found was super interesting was, Mike, you were using this as an analogy of people take risks based on their understanding of things. And you made the comment, you're like, I don't know a darn thing about hot air balloons. So to me, that looks like a bomb hurtling through the sky that I'm just strapped to. But to somebody who knows a lot about hot air balloons, they're like, oh yeah, no, this is totally fine and safe. And I'm going to do this, every sunny weekend. And just that thought process, even kind of applying to, how do we look at the evolution of, trying new things at our credit union, I think is a pretty cool analogy. So maybe talk me through, your thought process of this idea of, you kind of take risks based on the things that you're familiar with.
Yeah, absolutely. It's always said that in financial institutions, we're in a risk-based business. IT is a risk-based business. But at the end of the day, our knowledge of risk and the way that we make decisions as human beings is exactly as you said, based on our own experiences. So if we don't have experience in something, it always seems scary. It doesn't matter what it is. It doesn't matter if it's crypto. It doesn't matter if it's a new payment rail. It doesn't matter if it's a new fintech threat. If we don't have experience in it, it's scary. And I think that fear tends to hold particularly smaller financial institutions back in, do we want to take a leap into something? And, it also, when you're talking about risk, like, oh, well, should we do it or not? To me, that's the wrong question. It's, what do we know about it? What can we research? How can we gain that knowledge? How can we gain the expertise to even make that determination? So much of the financial services industry is based off of, either you're doing something in-house or you're utilizing a vendor. And depending on the financial institution, some are very, very much in-house. So we want a development staff of 50 developers. We're going to build everything ourselves, our internal or external apps, and that's all we're going to do. And the downside to that is that you miss everything else that's happening outside of your own window. Most of us in the credit union world, well, really all of us in the credit union world, we don't have the R&D budget of a Chase. We don't have the R&D budget of a Bank of America. We are stewards of our members' resources, and we all take that charge very seriously, is that the money that we're going to spend has to be something that's going to give value to the membership. So the great thing about knowledge is it doesn't cost anything. You can learn, you can research without making a decision, without making a commitment. And being able to work in partnership, some with vendors, I'm a fan of balance. There's a lot of things I want to do in-house. From a vendor standpoint, there's no vendor in the world that is going to know your institution and know your members like you do as the organization. And it's really that partnership, in working with a vendor who's seen other outside ideas. I think that's when, really cool things start happening of like, oh, we wouldn't have thought about that, or, oh, we wouldn't have done it that way. And that, if you're providing the business level expertise and helping that vendor, modify their program, their product so that it fits your membership, if you have that flexibility with that vendor, you can build things that you wouldn't have ever built on your own and they wouldn't have ever built without you. And those are some of the things in digital services that really excites me, is when you get those partnerships and when you really start gelling and really start building something up where it's, yes, it's new, yes, it's exciting, but it's just a merge of ideas.
Yeah, I think it's really cool to hear you just talk about that, striking a balance, right? And I think that's going to be different for each institution. And I like your hot air balloon analogy in that sense, right? Like if your institution has somebody on staff and you're like, oh yeah, like Susan's a hot air balloon pro. Like she owns her own hot air balloon. She takes it up every single weekend. She's been doing it for 25 years. You're like, heck yeah, like going into hot air balloons is not scary for us. But if your institution doesn't have a Susan and you're like, I don't know about those, floating bombs, like I have no desire to be a part of that shenanigans. Like that's going to probably change your institution's appetite to participate in hot air balloons. Or, in this case, it's, hey, what are our internal resources? Give us the comfort of, do we do this in-house? Or is this something that we should partner with? But at the end of the day, it's kind of your responsibility to do some level of learning to be able to have at least intelligent conversations around like, hey, look, if I'm going to partner with you about taking me up in this hot air balloon, like I should at least know some of the questions to ask to see, like, are we both aligned of what our expectations of this hot air balloon flight is going to look like?
Yeah. And that's exactly it. It's leveraging that expertise. We talked, JC, and we've talked a little bit now, skiing, mountain biking, it's like I'm comfortable bombing down hills, and people would look at that and be like, oh my gosh, it's like they're going so fast. That seems crazy to me. But it's something I've been doing for 40 years. And so, understanding, having the skills, building those skills, and being able to assess risk when you have that expertise is very different. Whereas, like you said, I look at the hot air balloon, I'm like, you're just floating around in a bomb that's on fire and everything around you is flammable. That doesn't seem like a great idea. I mean, same thing. I don't road bike. I only mountain bike because cars scare me. Again, now I have a lot of friends who commute to work on a bike, and I'll talk to them, be like, oh no, here's how you mitigate everything, and I'm just like, oh okay, that starts to make more sense. But otherwise, it looks like I'm just pedaling a bike around, all of these super heavy vehicles driven by people who are not always paying attention. Again, it's balancing it. And everyone, every individual, every organization, they have their own risk tolerance of what they are willing to do. And really only themselves can, understand what mitigations they have, against that risk. And so, I try to be really careful whenever, a new technology comes out, or, you hear something in the news of something happened to one organization. It's really easy to just immediately say, oh, well, this must have happened, but we don't really know anything in that front. Again, it's like you wait until actually the facts come out, you learn, and then you can make assessments afterwards. But, as people, we're all really, really good at, presenting opinion as fact. And that's, for better or worse, that's just the way it is. But if you want to have something good happen, if you want to move forward and feel good about a decision, you've got to take the time to understand what it is that you're doing before you can even decide if you want to do it or not.
Yeah, I love that you've kind of brought up this topic, man, because I think, especially as I've gotten older, one of the things that I've really realized about myself is that I look at pretty much all of life as a calculated risk, right? And some things I'm going to take, more steps to mitigate said risk, or some things I may do more calculation on the assessment of that risk. But ultimately, everything boils down to ROI. And it's like, so, one of the things that Mike and I bonded over when we were talking to GAC is skiing. And like, I look at skiing as a very similar thing. Like, my wife is terrified of skiing. She's like, what happens if you're like mobbing down the hill and you smack a tree and you're dead? And I'm like, hey, look, like, yeah, 17-year-old me probably looked at and calculated that risk a little bit differently. Like, husband, father of 2 kids, like breadwinner for the house, like I calculate my risk very differently now, but I also am drawing on that experience for that. But for me, like, I absolutely love skiing. Like, anybody who skis will agree with Mike and I here. Like, even a terrible day skiing is still a really great day. And so, like, my ROI is really high. So I'm like, hey, I'm willing to take that risk because I'm gonna have a lot of fun while I'm out there skiing. And what's been really fascinating as a dad is to kind of like watch my kids go through that. So my son actually turns 3 tomorrow. And for him, he's a processor, right? He has to calculate everything at 3. And it's just fascinating to watch his little brain work. And, the example that I use for him is, I got him one of those Power Wheels cars for his birthday last year. Terrified of this thing, Mike. Like, absolutely refuses to drive this thing. And so his perception of this was a really high risk and I don't understand what the reward is, so I'm not interested in that. But at the same time, I had to help him kind of break down some of those barriers to understand that if I do calculate what the risk is, and then I work to mitigate that, and then I kind of push my own boundaries, there's going to be a reward at the end of this. And then the long and short of it is every single night when I close my laptop for the evening, What does he want to do if it's sunny out? He's like, I want to go drive my Power Wheels. And there's like a farm field right outside of our house that has this huge hill. He likes to jump it off the hill. Like, he's crazy with this thing now. And he absolutely loves it. And so, kind of trying to instill in him this understanding that like he saw this as risky. He calculated it as a low ROI. But as he learned more about it and saw the opportunity of it, now he loves doing it. And so if he had never actually been willing to take that risk, he never would have gotten the reward of how much fun he has driving that thing, right? And I think, that speaks a lot to kind of what you were just talking about in that too. Like if we just say, hey, look, we're a financial institution. We cannot take risks. There's no acceptable risk. Then quite frankly, we're not going to evolve. We're not going to innovate, and we're going to die. Like, let's just be honest. So it's a calculated risk.
Yeah. And, going back to like kids and doing stuff, I have, I've probably learned just as much from my kids as I don't know, maybe they learn from me, it's their kids, they know everything. So maybe that's the way it's supposed to be. But, there is a struggle in learning. And, when you're doing something new in business, it's a struggle because you go from something of, okay, we have no experience in this. We've got to build it. We've got to figure it out ourselves. And, what we've got to rely on is our experiences that we've had. It's our background, but we've got to take that step and we've got to have somebody there with us, who's willing to kind of open the door to be like, okay, this is a struggle, but I'm going to help you. I'm not going to do it for you, but I'm going to help you. And I think a lot about that, about, career progression, about, the folks that we have on our team, either young managers or seasoned managers, especially when there becomes a generational gap, when it comes to crossing the generations, nobody's going to have the same experience. We're all going to grow up differently. We're all going to grow up in different environments. It's not even a comparison. And we're going to take the learning of that and bring that with us into the corporate world. And, but if you just do something for somebody, you take away the benefits that you get out of that struggle, out of trying to figure things out of that learning. I'm not talking about suffering. Nobody needs to practice suffering. You just get through it, whatever it is. But the struggle is part of learning. And, skiing, we did our first out west trip with my 13-year-old, 8-year-old, and 6-year-old. And the 13-year-old and 18-year-old in Utah, I took them into some side country canyons. Solitude in Utah, took them to Honeycomb Canyon. And, we had a couple good powder days there. And, I'm leveraging off of my experience of like, this is a stretch for them. This is big. This is steep. There's consequences. There's no fall zones. And, I'm trying to talk to, my wife and my parents and be like, it's okay. I understand they're 13 and they're 8. We're going to assess the conditions. We're going to pick the best possible line. And, I'm leveraging that, but in, no way would I ever wanted them to go out and do that on their own. But the thing that I realized was they're going to get to a point where if they don't start having these experiences now, at some point they are going to go out and do that on their own because they're going to want to. And they have the skill sets to do it. And, we were able to do it in a way that was fun, that was safe, to talk through everything. And they did it. I just opened up the door for them so that they could have, kind of that struggle of, they had never skied in 2.5 feet deep powder. Utah powder's so good. But, it's like, 2.5 feet of powder to them is up to their waist. That's like snorkel territory for adults. So, it was great learning for them. They had fun. But, again, it's not just a no, you can't do it or no, go out and do it on your own. It's let me help you. And, that's kind of the way that I try to approach, overall leadership in the credit union of let me put some guardrails up there so that, it's like, oh, okay, yeah, we're not just going to, yeet over this 10-foot cliff and this is the way that we're going to start this run. We're not going to do anything, that requires crampons or ice axes to go up, to climb, to do anything to start this run. We're going to find an easy entry. We're going to scout out the day ahead. We're going to make sure that conditions are right. And then when we get down there, I'm going to get to a point where I'm going to let you lead. And I did exactly that, with my 13-year-old. Didn't let the 8-year-old do it. But the 13-year-old, okay, there's our next pitch. Go down to there, make your turns, stop, we'll reassess. And, I do love skiing, but I also think it's a fantastic business analogy. Anything related to mountain sports, is about making the best decisions that you can. And, and from a financial institution standpoint, we're trying to help people. And sometimes to help people, you do need to take a risk. And, credit scores are certainly not everything. And that, again, you assess, you make the best decision that you can. Sometimes you're right, sometimes you're wrong. But if you don't try, you're never going to know.
Yeah, it's such a good point, man. I mean, it's funny. I went skiing recently with a friend from the industry who lives here in Portland with me, and he actually skis on the Mount Hood Meadows Ski Patrol team. Super seasoned skier, and skis, snowboards, the whole 9 yards, right? And this is somebody who's on the mountain every single weekend that it is snowing, and more so, and knows it like the back of his hand. And, we're out there skiing, and the first half of the day is just stunning. It's like we had gotten a foot of fresh powder the night before. It was 26 degrees. I mean, it was just flawless. And then about 2 o'clock in the afternoon, it starts to snow. And then some fog starts to set in. And by about 3, it's snowing really hard. And Chris and I are like, hey, look, we're both seasoned skiers. He knows this mountain he can just go, okay, 37 feet from now, I'm going to need to turn 4 degrees to the right. He could probably ski it blind. You know what I mean?
Yeah.
But we both look at each other and we're like, hey, look, we're a little older now. We need to be a little bit more careful about smacking into a, rogue mogul and blowing out an ACL. And they're like, it's just not worth it. Right. And so you use kind of that experience to say, you know what? And we called it. And we're like, you know what? We've had an awesome day. Would I love to keep skiing? I would. But do I want to have to call my wife and tell her, hey, I'm on my way home, but I have to stop at the hospital because I just, annihilated a kneecap? I don't really want to make that phone call. And so, but to your point, it's all about kind of taking these calculated risks, but how do you also kind of lead your organization in saying, hey, when do we push the envelope and when do we call it? And that does take some experience, and that does take some research, and that really does take relying on, your team. But especially if you're working with an outside vendor, that's when the relationship that you have with them is also going to be extremely important because, again, going back to the skiing analogy, right? If Chris and I had a very different relationship and it was one based on ego, one of us could have easily been like, no, dude, we're not wussing out. We're going to keep skiing. And the other one's like, well, I don't want to look, weak in front of this guy. So we're going to keep going. And then one of us gets hurt, right? But we have a mutual respect for each other. And so we say, hey, you know what? We've had a great day. We're going to call it. And so, how do you build that kind of relationship both internally and with the external resources that you depend on, that you can make really intelligent decisions about calculating the risk, the opportunity, and then, what paths do we follow and to what point?
Yeah. And I mean, to go back to your point, ego in adventure sports is the widowmaker. Absolutely. But it's true in business too. The mutual understandings, mutual commitments to success, a high degree of trust and understanding. When you have that with a vendor, it's really incredible what you can build. This is a dated story now, but this was so. Our credit union, we got our community charter in 1997. So we were founded in 1959. And so we were a SEG, Special Employees Group, Select Employees Group for Waynesboro DuPont Employees Credit Union for the DuPont plant here in Waynesboro. So from 59 to 97, we are completely SEG-based. I joined the credit union in 2011. And I joined at a point where we were really looking at some major infrastructure upgrades. We had pretty much made the decision, before I even came on that, a core conversion was going to be necessary. And the first thing that we needed to do was an online banking conversion. And so, we had a long history. Most of our members were still part of that SEG group that from a technology standpoint, expected things a certain way. Online banking had not changed in 15 years. One of the things that, I looked at when I started was, I kind of looked at all of the systems and I thought back to, PenFed from 15 years before. And I was just like, okay, not a lot's changed in the credit union world. It's all kind of about the same. And, that was really on the precipice of some online banking revolutions, from a vendor standpoint, from, large vendors, small vendors, credit union, CUSOs. But we selected our online banking product, and, we picked something that was flexible enough that had an SDK. It was one of the few that had an SDK on the market at that time. And it was something that we knew that we could leverage internally. We had hired 2 developers at that point. I was coding at that point myself. And as we looked at this conversion and as we looked at the design of it, we realized something right off the bat, that the entry into this, and an online banking conversion is, the standard conversion is your old platform ends, everybody re-enrolls in the new platform, and it's a giant headache and it's a lot of pain because you've got all the data sins of the past, garbage in, garbage out, bad addresses, unupdated addresses, bad email addresses, fat fingers. All of that data quality comes into play when you're trying to get someone re-registered into that online banking platform. And we looked at it, and we had a very good handle and a very good understanding of the existing platform. And we looked at it and we said, okay, we can develop a first-time login process where we're handling the first part, where we actually authenticate off of the core, and that we then pass a token to the vendor that says this is an authenticated account. And that, we can go ahead and then just ask one piece of known good information to validate there and have them go in. So we basically take out the registration process for all of the existing users. And on top of that, there were so many unique features as part of the old system. We said, we're going to skinny down the old online banking platform. We're going to allow it so that it's basically read only, but you can still log into it. And we're going to run those 2 online banking systems concurrently. So if a member wants to go in and see something of the way that it was before, they could do it. And the vendor looked at this plan and they basically just flat out said, you're nuts. Nobody's ever done it this way. There's reasons why we do it this way. It's extremely high risk. And we believed as a technical team, and we believed, as a leadership team of the credit union, that this was the right thing to do. And so we had developed a good relationship with that vendor at the time. It did complicate things because the vendor got bought by another vendor while this was all happening. So now we're kind of having to explain this to the new entity, and they're going, what is wrong with you all? This is a terrible idea. But we were convinced it was a good idea. And we were convinced that we were going to do it. And that, we had enough support on their technical team that they understood our philosophy, they understood our skill set, and they said, okay, we'll support you in this, but you, me, have to sign a document that basically says the success or failure is completely up to the credit union, that you hold the vendor not responsible for anything that goes wrong. I mean, they were like, we need carte blanche here. Absolutely. And so, I had to go to our CEO at the time and say that this is a good idea. And, again, thankfully, from a trust standpoint, he understood the scenario. He believed in the idea. He also, knew that I was the one whose name was going to be on it, and I believed in it too. And, all the time I've been here, less than a year. So still here. So it worked out. It's a happy story. But at the end of the day, we executed on this, and it was so difficult. The circumstances dictated to us that this was the right thing to do. It was a very narrow set of circumstances. I don't want anybody to think that, we should do this, because probably you shouldn't. The vendor's right, but just not in this narrow set of circumstances. Yeah. That, it's a lot of nuanced detail in all this, but we had, we set up our war room on conversion day. We overstaffed the service center. And then we waited, and we started to watch the logins go up. And we started to watch the logins go up and go up and go up, and the phones aren't ringing. The call center manager at the time came into the war room and was upset because she thought that the phones weren't working. And so Now we're opening up infrastructure tickets, trying to figure out, is really something going wrong here? And everything was working. And what it was is that we gave people the choice. We said, hey, you can go back if you want to, or you can see the new experience. You can go back, you can reference these things. You can see how we surgically put all this together so you can still get the same type of experience, even though it's going to look different. We designed it in a way that it's going to make sense to you. And we had set some, goals of like we were going to have, I think, 90% or 95%, of the membership at the time that was fully enrolled and using the new platform after, I think it was 180 days. We shut off the old platform after, I think it was like 28 days. It was just less than a month because nobody was using it. They weren't going back anymore. And, again, that was high risk. That was high risk. But it worked out, and we believed in it, and everybody on the team believed in it. If there had been anyone on the executive leadership team, myself or any of our technical team that were like, no, this is the wrong thing to do, we probably wouldn't have done it. And the punchline to this was later on that year, that vendor gave us their worldwide excellence in digital banking award. So for our conversion. That, again, it's when I tell the story, people are like, oh, wow, you really took a risk. I'm like, the vendor did too. And I have to give them credit. It was the partnership that made that work. It's like, yes. And if I were them, I would have made me sign the same document because I would have looked at that and said exactly the same thing. But we know our business and we know our member. And if you have the right people and if you have the right expertise and you take your time and you design something, that is as human of a digital experience as you can get, you get really great things. But it's trust. Trust is at the end of the day because everybody trusted everybody in that. And I look back on, and that's 12, 15 years ago. I'm glad that I don't know what I know now or that I didn't know it then because I don't know that I would have been able to make that decision. It was kind of youthful exuberance is a powerful thing sometimes.
Yeah, that is a really interesting comment too, though, in that sometimes like that youthful naivety is also a blessing, right? And sometimes you're willing to take on a little bit more risk that maybe if you just looked at it with objective calculation would have prevented you from doing something that would have had a really big positive impact. You kind of called back to two things we've touched on earlier in kind of that story too, Mike, in that, you talk about having plans, but also being able to be flexible with those. And then you have to have that culture of whoever's a part of that plan, that culture has to allow for trust and flexibility in the plan, but you have to have alignment. So you have to, commit to the decision that you make and kind of move forward with that and trust each other. But at the same time, one of the other things that you kind of called back to, and I want to touch on is, you mentioned that this kind of had to have a callback to your membership, right? This had to be a value add for your members. And you made a statement earlier. You're like, look, we're spending their money. Like we're fiduciaries of their money. So anytime we spend our members' money, it has to add value to them. Now, what I find interesting about that statement is that that value add could also be like operational efficiency for your team, because that will have a trickle down effect for member value and impact. But like you kind of always approach it with that lens. And I think that's something that's really interestingly unique about this industry, right? Like, yes, you think about any software company and ultimately, that software company probably wants to create software that people are happy with so they can sell more product. Mm-hmm. But for a credit union, because you're not for profit and because you're member owned, there is a little bit of a different lens to it where it's like, no, we're building this so it'll be sold more, i.e. more of our members will use it, but they're using it because we provided value to them. So does that kind of change how you look at projects and assess risk at the credit union?
Completely. And coming from both worlds of that, for-profit consulting. Developing a for-profit product is actually pretty easy. You look at your costs, you look at what you need to make on the margin side of things, and then you set your price accordingly. And then you set, a longer outlay for it. Not-for-profit models, it's, I don't want to say it's how much money can we lose, and just be on the other side of break even, but it is kind of that lens. We're not being good stewards to the community if we fail. If the NCUA finds that we are no longer a solvent financial institution. If we go under conservatorship, things like that. There's all of those risks associated with it. To the share insurance fund, everything. But we still have to be able to deliver. We can't go under, but we can't make too much, because then you get into the circumstance of, okay, well, how can you fairly give it back? And there's a lot of solutions to this, special dividends, things to that nature, where it's like, hey, we accidentally made too much money this year, so let's all give it back as a special dividend. Our credit union philosophy, and again, no right or wrong answers here, but our credit union philosophy is more along the lines of, we want you to utilize our products and services, and the more that you utilize them, the more we want to reward you. So we built a lot of custom products over the years, over our, whether it be an interest-bearing checking account that is, once you meet, there's different levels of it, but once you meet a certain number of swipes, and that you spend, $100 or you spend $250 and have a greater number of swipes, we're going to deliver an interest rate comparable to the current interest rate environment. Right now that product called Grow is, 5 point something percent, on balances up to $25,000. And, that's a product where, hey, the more, if you're using it, you don't have to use it that much, but you're going to get the value out. We also, refund foreign ATM fees as part of that product. We have another product on the reward side of things that will refund, 3 NSFs annually, and as well as giving free foreign ATM fee refunds and refunding any fees that we charge as well too. We have products where we have our interest rebate program. So the more products that you have with us that are eligible, we give back up to 10% of what you pay in interest. So we're giving that back as a dividend. So again, the more products that you use, the more that we want to reward that. And that's really our philosophy towards risk, towards the offset. There's all the modeling that happens with the products, and it's to a certain extent. I said sometimes it's hard, but sometimes it's also easy too. That we can be comfortable with. Okay, this product is going to have a 20 basis point ROA. Where to a bank or any for-profit institution, they'd look at that and go, no, we're, our minimum threshold is 200. You can't, run a company off 200 or 20 basis point return on a product, unless they would consider that a loss leader. So, it's the balancing act that comes into that. That's the risk management, and balance is not equilibrium. I think that gets thrown around a whole lot. Like, people talk about work-life balance and think that, it has to be equal. It's like, no, that's not really a real thing. Sometimes work's going to need more. Sometimes home's going to need more. And even if you get it perfectly balanced, like get one sick kid or, a washer and dryer breaks at home, and suddenly your priorities are going to be shifted. Suddenly your work priorities are going to be shifted through the number of things that, can happen from a technology standpoint. But it's about the balance it's an aggregate. It's at the end of the day, are you delivering value? Are you financially sound? And how do you make decisions that take that aggregate into effect? Because the worst thing you can do is make decisions, in a, just in a myopic way, or look at it as a silo. Kind of the same thing with skiing. It's just like, oh, well, if you look at, yesterday it cleared up, in the afternoon. It's bad now, but, because yesterday it cleared up. Well, that's not really a great way to look at things. You don't know that that's going to happen. And you can make some particularly bad decisions. And I'm very familiar with Mount Hood. I was kind of chuckling when you said it, because I didn't tell you that I went out there. But last week for the mega storm, I hopped on a flight with my wife, and we skied Timberline for the weekend. So it's a nice 2.5 feet of powder today. Yes.
Now, you tell me this now? Where was the text on that one? Wow.
We were in and out. I mean, it was
That's
one
cool.
of those. Like,
no, it's fine. I won't hold this against you. No big deal. No, I think you'll find this really interesting, Mike. I never really thought about it this way, but I was having dinner with our CEO recently, and he was talking about just kind of how there always needs to be a state of instability and flux to actually create stability. And he used an analogy that, again, this is, I think, why you'll like this. Is, and he, just took, I'll use my, highlighter here, but he took a fork while we were there at dinner, and he said, if you hold your hand perfectly still, what happens? It falls right over, right? But if you want it to stay upright, like, you have to kind of keep moving your hand around. Like, the most stable systems are actually a little bit unstable and just constantly in flux. And I think as evaluate, like, what are the things that we need to be doing at the institution to provide value? Like, we're not necessarily just looking to say, well, like, hey, online banking's been the same for 15 years. It's stable. Like, no, it actually needs a little bit of, of fluctuation. It needs some change. We need to actually understand what is our members looking for. I want to put this, just put a pin in this and we'll come back to it. But you were also just talking about, as you kind of create some of these programs there at the credit union and how you use those to derive value for the members. One of the things that you talked to me about before we started recording was just how, one of the also almost responsibilities of the credit union is to actually put some guardrails up for our members in terms of, like, some of these programs and initiatives that we put in place are to help guide you towards making good, sound financial decisions, because ultimately one of the biggest value adds that the credit union offers its community and its members is helping them live like long, healthy, stable financial lives. And so, how do you think about the systems that you put in place, the products, the structures around that to actually incentivize good behavior for members, not just good behavior that makes you money, but good behavior that actually helps set them up for financial stability themselves? So I want to come back to that. But while we're on the topic of just, especially even just digital banking experience, one of the things I'd love to get you to kind of talk a little bit about too is just, the ebb and flow of the expectation of both the institution and the members, right? And leading into this conversation, Mike and I were talking about, kind of how the pendulum swings. And, right now it feels like, especially in like digital banking, the pendulum has very much swung to, is this thing pretty? Which that's a whole nother conversation into itself, because, Mike and I both have agreed we identify we like to ski. So we have one commonality, but that doesn't necessarily mean that what he thinks is pretty, I think is pretty, right? And so, there's a lot of subjectivity that goes into, is this pretty? So that's a whole nother conversation that maybe we'll touch on. We'll see how much, Mike wants to hang out with me on his Wednesday night. But really just talking about, how do you understand, well, one, what are members asking for? What are their expectations? What do they see as valuable to them? But then two, like, how do we apply our credit union lens to this and say, like, hey, I get that what you want is this really pretty digital banking solution that, you don't even have to log into and you can just show up and do. Like, that's great, but like, until a criminal steals all your money. So, we have to also think about other elements of this. So maybe just talk to me a little bit about, kind of how you've seen the pendulum swing and what members and credit unions expect out of something like digital banking.
Yeah, absolutely. I mean, again, and products are like water; they ebb and flow. And for the past, probably pre-pandemic decade, it was more about how many features and functions can we get into a digital experience? How can we recreate the branch, as a digital experience? And that was all primarily focused on integration. So a lot of fantastic fintechs came out, a lot of internal financial institution innovations. There was just really this boom of all of these ideas and different ways to do things. And, I think what you got at that point is you started to get, kind of a clunky feeling to it. It's kind of like if you've ever organized a closet, you take everything out of the closet and you put it all back in, you get everything organized the way that you want. It's like, this is great until you start buying more stuff. And then it's, you go fast forward of all the stuff that you put in there, and suddenly your well-organized closet is now this, complete disaster again. And so again, it's the features and functions versus the aesthetics. And there is definitely right now, from what I've seen, a heavy focus on aesthetics. But members aren't necessarily asking for that. They want things to be easy to use. Most people, when they look at something, they know what they don't like. But it's very hard to articulate what they do like. And, if you talk to a lot of software developers, they want to work with a UX engineer. They want to work with somebody who's going to be designing the aesthetics to it. They want to design the code. They want the features and functions. But, again, it's a different skill set than just programming. So
totally.
kind of this focus on things today is going back to that, the aesthetics, the seamless experience. And, the one thing that, we do hear members asking for repeatedly is that, what about the security side of things? Which is not something that really would have happened 10 years ago. I mean, I remember when, MFA became a requirement, that all institutions had to offer it. There was pushback from there. Why do I have to get this stinking code? Why do I have to do this? Why do I have to do it? They weren't focused on that. But now we've had 15 years of spam, fraud-related text messages, phone calls, phishing, data breaches. And, at this point, it's, just commonly accepted fact that if you exist, your information has been compromised. It has been included in some type of a data breach. And so, now the focus on the aesthetics, it takes the technology and puts it kind of on the back burner, or not back burner, but in the background of, okay, well, let's make this as seamless as possible so nobody, has to know everything that we're doing, and it can still be easy, but we're going to add more security because, we need a technology problem to solve the data breach problem and the phishing problems and the phishing problems that were really also caused by technology. So, human beings, nobody is just out there writing down all this information. We, industries decided to put everything all into one big database, and a small mistake in change control or a very creative or elaborate digital intrusion caused that to be breached. So when you're putting everything in the background like that, when you're just focusing on aesthetics, consumers don't see it. And we're training people that, hey, don't worry about the security. It just works. All you have to do is log in. I think we really play into the attackers in that, because that's how people fall for scams. And that there's a sense of urgency. The type of scam can change, but there's always that sense of urgency. There's always that fear. Sometimes the fear is mixed in with greed. Some of the pig butchering scams that we're seeing related to, fake investment sites, involving crypto and now branching out into other types of investments. It's a greed aspect of that, hey, I want to make money, but it's a fear aspect too of that if I don't get in now, I'm going to miss out. I'm going to miss out on this. And, the one thing about scams is that anyone can fall for one of these. It could be me, it could be you. It doesn't matter how much knowledge we have. Given the right set of life circumstances, any of us can fall for it. And when we're hiding things so much in the background and just kind of putting it into, the secret sauce in the background of that, everything's secure, and we're not assisting with the education from a consumer standpoint, I don't think we're doing anybody any service of that, oh yeah, just click that, it's fine. The reliance on text messaging for fraud alerts, for, oh, here, click this deep link into this. We're training people not to think about where it's coming from. Just click the link, just click the link, just click the link. The fraudsters see that. They inject themselves, and now it's like, oh, it's great. The industry's trained people to just sit there and blindly click links. What do I have to do to scam them? I have to click a link. I just have to send them a link. I have to craft a clever website that mimics everything that they're doing. From an online banking standpoint, set up a phishing site. And the phishing sites that we're seeing today from an industry standpoint are, they're so much more advanced than they were just pre-pandemic.
Dude.
The reliance, MFA was great. Oh yeah, send a text code, send an email code. It's like then they have to compromise two pieces of information, and that can't be done. And, we've been able to see some, web kits that are out there for phishing sites, for other FIs. And, we have a lot of partnerships with law enforcement. And, some of the things that we've seen, the question of, how did they trick somebody into disclosing, that code that everybody gets in text message, where the first thing that everybody says is don't share this code. Don't tell anybody this code. Only enter it into a computer system. Well, some of the clever kits that we've seen, where they're spoofing a financial institution, whoever it is. They've got the whole login process mapped. It looks either identical or similar. They're hiding the URL through a bit.ly or any other number of ways to do it, but also hoping people are on their mobile phones, sitting in their car going, oh, what's this? Click. I'm at a red light. I just want to click real quick. And then they're following the process. Well, after the password is not really authenticated, we see scripts in these kits that'll go out to the legitimate site, log in using the username and password, within milliseconds of it being entered by the victim, which is then going to trigger an MFA that goes to the victim's phone. And the next step in the phishing site is to enter in that OTP, that one-time password, that out-of-band message that they just got for that code, which then programmatically on the back end of these command and control systems is then entered into the live site. And at that point, we've seen coding where it'll actually switch over to a call center type scam, where it goes directly to an agent that can then commit the fraud. Online banking credentials have been compromised, the MFA's been compromised, and that's it. That is an unbelievable jump in sophistication in a short period of time. And it's not, the one-off small groups that we're all fighting anymore. It's very intelligently organized groups that are operating, mule networks, compromised account networks. They are very well organized. They communicate very well. And, we have to be right as a financial institution from a security standpoint 100% of the time. They can send out 1 million different scam texts, and all they need is one. Yep. That's it. I mean, that's the averages against this are so completely tilted. So, I think the look, the aesthetics, the ease of access, it is important, but we can't lose that consumer education on it. And that's, one of the things that, we try to do as an institution with the best results that we can get, is educating our membership. And I think that, those in the industry that, really see the problem for what it is, they're taking that approach too, which is very high effort. I mean, it's to develop the materials, training materials, to not just be, like the little blips of fear. I mean, everybody wants, just like give me the 10-second Instagram thing of, just scroll and be on. These are not things that can be explained in 10 seconds. It requires a commitment, a desire to learn.
Yeah, you started with kind of like the two truths that you tell all your new joiners, and one of them is, everybody's human and we all make mistakes. And to your point, I mean, it is so crazy how sophisticated these things are. And, back in the day, we were joking about this before we started recording, right? Like, I'm the Nigerian prince and I, need $10 million in a US bank account. I just need your info. And in exchange, I'll give you $1 million of the 10 million. And we got wise to that pretty quick, right? Yeah. And you start to send that out, like it just smells funny. But, it's funny that you brought it up because literally yesterday, Mike, I got an email that went to our generic sales email. It's a distro list, right? You can get it on our website. I'm on that distro list. We get this email. It's from the CEO of a good-sized credit union here in the US, inviting us to participate in a digital banking RFP. And to access the RFP, I need to go through and collect a secure document through a link. Yep. And I was like, hold the phone. Nobody just lobs RFPs at me with nothing. Like, that smells funny. Yeah. I look, and the email address is from the CEO at thecreditunion.org. Like, everything looks good. The logo is super polished. It's the logo of the institution inviting us to participate in their RFP. I was like, this whole thing just smells funny. I checked with my team. I was like, hey, has anybody interacted with this institution? Nobody has. I don't even have this guy's email address. I don't know if this is the real one, so I'm not going to reply to it because it could just go back to the fraudster. So I go find him on LinkedIn. I message him on LinkedIn, and I was like, hey, I'm going to throw out a really high probability this is a scam, but did you just invite us blindly to an RFP for digital banking? And he actually responded like 10 minutes before we started this podcast and was like, nope. Yeah. Right? But like, that was epic levels of, it was very targeted. Like, they specifically targeted a digital banking solutions provider with an RFP to participate in digital banking for a credit union, took the time to put the logo in, like all of this work. It said it was sent through Mimecast, which is a really commonly used secure document portal that the credit unions use, right? Like, there was a lot of effort put into that sucker. But again, to your point, right? Like all they have to do is send that out to the 37 digital banking providers there are in our industry, to every single one of their sales organizations. All they need is one person to click. Ooh, RFP. I want that sale. Yes, please. And you click the link, right? And I think, I had a guest on not too long ago, Uku Tamikas, who is an expert in fraud prevention from a vendor side of things. And he actually works with the Estonian government and some really cool stuff. And he was talking a lot about that on his podcast, Mike, about how they just look for really opportunistic ways where it seems just totally normal to us. And for me to get an RFP from a credit union is normal. Granted, that was a little abnormal in how it came, but getting an RFP for a digital banking evaluation is normal. So that doesn't immediately trigger a red flag. What's a super normal thing that you get? Shipping notifications, right? Your package is set to arrive, but your address was entered incorrectly. You need to just update your address so we make sure it gets delivered. I don't know about you, dude, but between my wife and I don't know how many things are showing up to our house, right? We get everything delivered anymore. So I could be oh, you know what? I don't even know what this is, but it's coming from UPS. Maybe, Erica ordered it. Yeah, I'll just knock that out real quick. And you're busy, you're in between meetings, you're in the car at a stoplight. Side note, you shouldn't be on your phone at a stoplight at your car, but we're just saying. But you're in that moment, we all are. And you get that text, you get that notification, whatever it is, and you're oh, yep, I'm just going to click on that. I'm just going to follow through. And bam, You're now the victim of a scam, right? And so it is we talk about this all the time, but it's we have to get right 100% of the time. They just got to get lucky every once in a while. And the ROI is through the roof for them.
And that's the way that you articulated that is perfect, because it's, if you just change some of the circumstances, where you were, what happened, what if your 3-year-old had a nightmare the night before, so you were up with them, so you didn't sleep well, you're in the car, you just came from a meeting, where the CEO says we need to get more customers, whatever it is, they don't know, it's just luck, but they wait for those circumstances and the right ones come and people click without thinking. And that is, that's the danger. It's also the power, that they have. And again, if we continue from a technology standpoint, I'm talking about IT in general, across all verticals, not just FIs, but if we continue the approach of building things that are so simple that you don't need to understand how they work, these scams are always going to exist. And to a certain extent, these scams have always existed. There's a great book. I think I've read it 3 times or so. I actually wrote it down so I wouldn't forget about it. But, it's called My Adventures with Your Money. And it's a biography of a con artist named George Graham Rice, who was born in 1870. And it was written by T.D. Thornton, 2013, 2015, somewhere in that neighborhood. But it outlines all the scams of the time, from, mining investments to, infancy, boiler room, alternative stock markets. And you read this, it's oh my gosh, that's crypto, basically. The way that it's different, all these different scams. Not that, crypto is not legitimate, but the way that the scam is crafted, or the pig butchering scams. And it's these are just different flavors of stuff that have been around for hundreds of years, probably forever. It's the same type of scam. It's just the window dressing changes on it. So it's a really interesting book. It's a really comical book, but it puts kind of things into perspective that these are not new problems. They are old problems that have, that look different. And if you understand them, you can better protect yourselves. And, I'm always curious when, I see a study based off of, generations. It's where, the younger generation wants this. It's the older generation wants this. And, inevitably, it seems like when you go look at these studies, it's, whoever, found or whoever funded the study happens to be selling the product that will solve the problem. So you always got to
Shocking,
look.
huh?
Shocking. It's shocking.
But side note, it's also hilarious to me how many people don't actually look at that.
Yeah.
This is revolutionary data. I'm yeah, it's a revolutionarily, I can make data that says anything. I can manipulate the data to say whatever. So I'm going to support my claim of what I'm selling. So if you're the report on, how to protect fraud in digital banking powered by the company that sells, you're oh, hey, Oh, that's funny. Sorry,
Yeah.
continue.
No, it's like, it's go back to that, whatever the quote is, it's like there are lies, there are damn lies, and then there's statistics. It's like where it's all, you can manipulate them to show what you want. Now, not that every study does that, of course.
Absolutely. Yeah, I think that's an important call out.
But, it is important to, look at the veracity of the information itself, and is there potentially a bias? But, I everything that we see now, about, the younger generation, they want it fast, they want it easy, they don't care about these things. And every time that I'd read one, context, for a number of years, I taught a night class at the college that I went to, Eastern Mennonite University. It was, part of we wanted to do some things in the credit union to encourage community outreach. And this was a way that, I thought would be fun for me to do. And, it was, I think I learned more from my students than I probably taught them. It was a fantastic experience overall. But I noticed something, because I'd always ask them I'd read these studies, I'd be like, okay, I wouldn't tell them why I was asking them. It's like, what do you all think of this? And the answers were never aligned with the study. Now, that could be geographically, that could be whatever it was. But the one thing that, I found most interesting was when I started asking this, and I think I only asked one question the same every year. And that was, who has their location services turned on, on their phones? And, the first year, it was like 90% of the class was like, yeah, I trust it. It gives, I get maps and everything else. Every year, the percentage of hands went down. The last year that I taught the class, less than 20% of the class had their hands up that they had location services turned on. And the why every time was that I don't trust it. I don't want to be scammed. I don't know what's happening. I don't, there was really a shift in the distrust of technology that, I assessed went back to, the huge increase in, 18, 19, 20, of the text message scams, of all of a sudden seeing all these things, all the scams that, revolved around fear, things to that nature, all of the scam calls. My kids all have Apple Watches, and, Apple Watch security, with kids and the family restrictions are they only work but so well. And, the kids, like, they get calls all the time from unlisted numbers and everything. And, like, I saw it one time and it really surprised me. I was like, whoa, I thought we had that blocked on there. And it was a nuance after a software update. And he's like, no. I'm like, well, what do you do when you get those calls? He's like, well, I don't answer. I'm like, why not? Because it's always a scam. And I'm like, dude, you're 6. What do you mean it's always a scam? He's like, well, I answered them one time, and, like, they started telling me that I was going to go to jail, and I was like, no, I'm not, and, like, a typical response, whereas adults, we get freaked out. The kid's like, you're not sending me to jail, I'm 6. Yeah. But it's like the 6-year-old has that impression of, like, why I wouldn't answer a call for a number I didn't know because it's a scam. And, that perceptive has shifted. And I do believe that, the quote unquote younger generations, they have fear associated with technology, and probably what's a healthy fear. But we've also, as we're bringing those, new members on, we've got to be able to communicate that our platforms are secure, and not just, you don't need to worry about that. It's all in the background. It's all just, it's in, behind the curtain, everything's going to be fine. They want to know. And we see that more in, our questions that come in, that our service and are really spending time on, of making someone comfortable with our platforms. And, you would think that would be, if you read everything in the industry, that would be the older generations, and that's not. That's not the demographics that we see. And we're in a rural area. So, you can kind of take that out of, it's like, oh, well, the urban areas get more cutting edge stuff. And so people are more, ooh, we are not urban at all. Shenandoah Valley is beautiful. It is not an urban area.
You know what I find fascinating, Mike, is that also kind of brings us back to what you were talking about earlier, of just kind of the, like, overinflation of features too that we saw happen in something like digital banking, right? And, I'd be a little careful with my words here, but we don't see this across the book. But one of the things that I find really interesting is a lot of times when I do see those legitimate RFPs is sometimes we see some of that feature bloat, right? And, like, this was something that we used to do 20 years ago. and we are just not willing to scratch that off the RFP and say that no longer has value, or the landscape has changed and that no longer is relevant, or whatever it may be. And, you were also kind of talking about how even in the initial, iterations of something like digital banking, we just said, let's take exactly what we do in branch and let's make it digital in the exact same way. Another fascinating conversation I had on the podcast not too long ago was actually with Sanjid Kalita from FinTech Meetup. And he was one of the founders of Money 2020. And he and I were talking about even just conferences, right? And how when the pandemic hit, how many conferences were like, okay, this is what we used to do in person at our conference. We're going to do that digitally, right? And I think I speak for all vendors here when I say our virtual booth, I might as well have flushed my money down the toilet. It was utterly useless. Like, let's all call a spade a spade. Like, it's hard enough to try and get Mike lured into my booth at an actual trade show, let alone hey, Mike, you should come hang out with me in my super cool virtual booth, right? It just didn't work. But we tried to say, well, we're going to take exactly what we did and we're just going to do it digitally. So I think we're at an interesting influx in just kind of this, period in human interaction with technology where we're seeing some of that. We're seeing the holdover of, well, we're trying to do what we do physically, exactly replicated digitally. And also the things that we started with in digital, we're maybe not willing to deprecate. And I think a really good example of that is, it comes up all the time that, checks aren't dead in the US.
Yeah.
And they're like, well, we can't kill checks because people still use them. And I will totally I will plant my flag in this ground. I'm probably get some flack from it, but the only reason is one, I guess two reasons. The one has been eliminated though, but the first is just there wasn't a truly better alternative for some use cases, right? But now with the addition of FedNow and RTP, I argue that is no longer on the table.
Agree completely.
So the only reason is because we let them keep using it. You look at other countries, right? China's completely cashless. It's all digital. And they just said one day, hey, sorry, sucker, that ain't worth anything anymore. It's all got to be digital. And people balk about it for a short period of time, and then they're over it. And then it's an all digital cash economy, right?
Well, we still have mag strips on our cards.
Yeah, exactly. Why?
EMV's been, yeah.
Why? Right? And it's because we just continue to allow consumers to some level to dictate our fear of taking something away from them, upsetting their, choices of how they do business, which, to be fair, if you were the only credit union, right? If Mike and DuPont were all right, we're completely moving cashless. We don't accept any more cash. We don't accept checks anymore. I'm pretty sure a large portion of your membership would be well, screw you guys. I'm going to go to somebody next door because I still need those things to function in this society. But as a whole, if America said, hey, no longer checks, they're done, kill them. Here's your alternative. People would complain for a while and then they'd be done. Right. Mm-hmm. And so I think that's an interesting thing to look at as we look at what is this next evolution of, and kind of this goes down the path of what you were saying of hey, the pendulum is swinging. We're looking at, well, we need to make it convenient for people. We need to make sure that the features add value, but how do we also pare it down so we can be really thoughtful about that experience for them? And then two, how do we make sure that underlying infrastructure is actually supporting this evolving and growing and continuing to provide, a safe harbor for our members' money? And that's a really tall order. That is not something you and I are going to solve on this podcast in an hour.
No, and I mean, in our country with our economy, it really takes government regulation to end a channel. Channels don't die; they just become niche. We could sit here probably for 30 minutes and count out all the number of ways that there are to pay for things, and probably not capture them all. And some mainstream, some niche, but it's just a matter of the industry. We're all credit unions don't compete with one another, but we compete with one another. It's banks are a little bit more, we're competing with everybody. We're competing with other banks. We're competing with other credit unions. I do think credit unions share information better than a lot of other verticals. But at the end of the day, there is still a competition that goes on there. And you don't want to do something that's going to alienate a large portion of your membership. It's very difficult to sunset channels. It's very difficult to sunset, products from that standpoint. And what you get is this kind of fragmented experience where it's like, I believe, and again, it's opinion. It's a digital process, it should stay a digital process. If it's a human process, it should stay a human process. Each one, at the end of the digital process, you can have a human do a value add to it, but the human shouldn't be necessary to complete, the process. And again, if you're in a human-to-human interaction, you shouldn't need, a digital system to complete that interaction unless it's a value add. So it's something that makes it easier, that makes the transaction, the relationship, whatever it is, worthwhile. And you just get this clunkiness, this fragmentation. I think my favorite example of this is, it's a mix of e-commerce sites, car dealership sites. You're browsing for something, you're looking for, a new Ford, you're looking through trucks, and all of a sudden, like right where you're looking, because you paused for a quarter of a second, it's like, hi, I'm Tony, can I help you? And it's like, first of all, that's not a real picture of Tony. It's like 2:00 in the morning. Tony is not sitting there, with his headset on and, in his perfectly pressed outfit and everything, just waiting to get a question. And it's like, the only thing that I want is that I want to read. I want Tony to go away. But it's a really obnoxious insertion of a human being into an experience. And I don't understand how a lot of these things come up and then they gain traction because, if you're in the grocery store and, you stop and, you pull out a box of Cheerios, to look at the ingredients, you don't have a discombobulated, or disembodied head that just appears and be like, hey, can I help you? Or somebody sneaking up behind you and play, can I help you? That's weird. We would not accept that as a human-to-human interaction, but on the digital side, we build it that way. And again, we being the IT industry as a whole. And, again, I think that just goes back into that, hey, let's throw everything that we can in there. Let's not, look at the process as a whole. What do we want to achieve? To me, it's bad technology. And financial services, we're just as guilty as anyone else of doing things that, were not the best solution, putting things out there that were not the best solutions.
Well, I think this goes to, too, we all know the saying, sometimes you're a hammer looking for a nail.
Yeah.
And sometimes there's just no nail. You know what I mean? And I think that does create a lot of bloat in things as well. And I think that also kind of ties back to what you were saying about the, spanning generations too. I think that's one of the things that I find the most fascinating as I have conversations with people on this podcast, as I just do my own, quasi market research. And I talk to people and, I probably bug way too many people in my personal life with questions about, financial services and digital technology. But even as I look through that, sometimes so many of those things surprise the heck out of me, right? To your point, the study says, the study says that. The study says that people want to interact with a chatbot. I tell you what, literally just a couple of weeks ago, I heard my wife while I'm in the office, yelling at something. I come out and I'm like, what the heck are you all frustrated about? She's this stupid chatbot. I just want to call and talk to a person, and it was so trying to get this right is not always a one size fits all problem. And it's not as easy to just segment and say, well, the younger demographic wants this, the older demographic wants this. And it's not that black and white. And so I think that, again, just kind of boils up this whole conversation that we've been having of, you have to have some idea of processes in place. You have to not be afraid to kind of evolve and try new things, but you also have to, be prepared to pivot and realize, you know what, this wasn't the right decision or it was the right decision, but it was implemented improperly. And so I think especially being a credit union, that guiding light has to be, just boils down to what is the value add? Where's the real value add? And I actually wish more people, I sit on the board of a credit union, so I actually get to witness this even myself, is I wish more people would show up to things like annual meetings and actually have conversations. Because they don't. Because I bet you a lot of times if we actually asked our membership and we're like, hey, does this actually, like, if you controlled the budget, would you have spent money on this? I'm really curious to see what people would say a lot of times, right? Mm-hmm. So that also creates an interesting guessing game for you all on the credit union side, and especially in the technology realm of trying to deploy things, gather feedback, and identify, like, did this really provide meaningful benefit and value? And does that align with our core mission of what we're trying to do for our members? Like, again, these are tall orders. This is why you guys have long strategic planning sessions and lots of things to talk about and, years to work on problems.
And I will say, in our organization, some of the best ideas that we have ever implemented from a technology standpoint did not come from what would be considered our technology vertical. It ebbs and flows. We, usually turn it on every couple of years, but we have an ideation process that allows any employee of the credit union to submit an idea for enhancement. It's been called different things. Today it's called service obstacles, but it's just, hey, do you have an idea? Is there a process? Is there something that's clunky that you want to see improved? Or do you just have a general idea, for something that you'd like to see us implement? And that goes directly to what we call our product development group that looks at and prioritizes ideas that can then be scoped and can then turn into projects. So the one thing that I think has been key to its success is there is absolutely no management involvement to the point of where it gets recommended to be created into a project. We have an IT steering committee and we have governance committees that looks at it to make sure that, we don't go outside of those guardrails of, we're going to start, delivering cashier's checks by drone or something like that. That probably would not be a great use of funds off the top of my head. But it goes through the whole process from the staff who see it every single day. Yeah. Because their view, their perspective is totally different than mine. I can see, the quote unquote 30,000 foot view, but I mean, really I can see the forest. I can't see the trees. I can't see the ground. I can't see the rocks. And those are the things that are going to trip you up. It's not the view from the top. It's the day to day. And some of the best products that we've, in my opinion, ever designed, some of the best processes we've ever improved came from that channel. Now it's work to go through it because, you get everything. If you, tell people, hey, give me any idea that you want, you will get any.
You get a lot of ideas. Yeah.
you get a lot of ideas. And some of them are, oh, okay, that's interesting. Not sure how we'd be able to do that, but, it's cool. But again, you start to see kind of a picture of what everybody is thinking about, where are the themes towards it. So it's something that if, your organization doesn't have that, where you cut out, the people who are normally making those decisions just to see what you get, it's certainly worth the experiment. We did it as an experiment and we bring it back. We usually run it for a year and a half, 2 years or so, shut it off for a year or 2 years, because you do get a lot of ideas. And, there is, depending on your organization size, we can only do so much. We can only implement so much, and you reach a saturation point where if you try to implement too much, you actually implement far less than what you could if you just tried to do, 2 things as opposed to 10.
Yep. Well, I think that kind of goes back to what you were saying too, of just, calculation too, right? Is, okay, what are we capable of taking on? What's going to have the biggest impact, right? I've kind of gone back on my word, Mike. I apologize. I said at some point I was going to let you go to have dinner, and I've definitely gone back on that. But I can't let you go just yet because you brought up one thing a lot of times, and I want to touch on it, and that's guardrails. And I know one of the things that we talked a little bit about beforehand too was just how, especially in an industry like financial services, how sometimes it gets painted as a bad picture, but how, regulation and actually some rules and some guardrails and actually some friction points in terms of just processes or even, friction points in the UI of digital banking. Like sometimes those things may sound negative, but actually, especially when we're talking about deriving, value for members, it might actually have a positive outcome. So I'd love for you to kind of touch on that a little bit.
Yeah, I think probably the easiest place to go with that is NSF fees. That has had a tremendous amount of regulatory focus, within the last year from the CFPB side of things, from the NCUA. All credit unions and banks are now required to, as part of their quarterly call reports, to submit directly what their income is directly related to NSF fees. And I think it's really easy to jump on NSF fees if this is the term that's been thrown around, a junk fee. And that's not, to me, that's not a junk fee. And, I don't know many people who are going to sit around and defend an NSF fee. And there's definitely been some, bad actors in that space because, it's, hey, I spent, I made 3 purchases and, this particular, I tried to make a deposit in between, but this merchant, normally it doesn't post for like a day and today they posted it early or whatever. Everybody can make mistakes, and so because of this mistake, I got charged $25 or $35 or higher, depending on the financial institution. And there's definitely been institutions that, have taken advantage of it, but, that fee in itself, and again, from a credit union standpoint, I don't know of any credit union that we talk to or work with that are heavily reliant on those types of fees. They focus them more on that it is a deterrent. It's not necessarily a service, but it's not junk. There's a cost of running a financial institution, bank or credit union. There's core processor costs. There's vendor costs. There's every mobile deposit, credit union and banks pay for. Every login to online banking, every active user into online banking. There's a cost. There's infrastructure costs. There's vendor costs associated with that no one pays for. And so, fee income, that to me, the institutions that are, not reliant on fee income, they have efficient operations. Institutions that are really relying on that fee income, it's probably because they have an inefficient business. And again, that's not everyone, that's not everything, but it's an easy way to, kind of give it, give income a goose if you're for profit. Like, okay, well, let's just increase fees. That'll raise the bottom line. Netflix, let's just keep increasing the cost. It's an easy way to continue revenue. But the NSF fee, we focus on our institution, and again, lots of different approaches to it, but we do give backs on NSFs. We have products that are specifically designed that, hey, if you make a mistake, we're going to automatically refund it. We're going to refund 3 a year. And the reason why we picked 3 is that we didn't want people to become reliant on it. If you from a regulatory standpoint make that fee something that's not a deterrent, then you're basically saying to the individual that, hey, it's okay to spend more than you have. That it's okay to, just continue to rack that up. And, you reach a point where then if your account gets so negative, you get into a charge-off scenario that's terrible for the person. I don't ever want to make a decision that, where I have created, taken the guardrails off and, allowed someone or put them into a position where they could dig themselves into such a hole that now they either, have difficulty getting out of it or they can't get out of it. That deterrence matters. And, again, it has to be used responsibly. It should never be, a primary source of income. But, from a regulatory standpoint, there's so much that the CFPB and NCUA does that I agree with completely. And I think that they're great things that they're doing. We get to a point where we start talking about these things where you're getting into, the mechanics of the business, where I hope that they just don't go too far to take that out and to lose that deterrent, because now we're enabling people to make decisions that are not good for them. And we have all, myself included, have overspent, have gotten ourselves into trouble, particularly when we're younger. Trying to get out of credit card debt is brutal. It's a spiral effect. And, at the time, I'll put myself, you put 18-year-old me and you take me and give me a $5,000 limit on a card where I'm working, in college, after school and everything. I'm not making a lot of money. You give me a $5,000 limit on stuff. I'm 18, I don't have stuff. Now suddenly I can buy stuff, and I have the sense of an 18-year-old. Well, guess how that went bad. I mean, it's like you don't really have to be, Cassandra to really predict all of this stuff. It's like that's probably going to go bad. Again, so some of those guardrails are there for a reason. Some of those deterrents are there for a reason. And, again, I'm waiting to see how all of this plays out, but I'm hopeful that, a compromise is reached so that, you have institutions, you have the regulations where it says institutions, you can't do this because it's predatory, but you still can do it and keep it where it's a deterrent.
Yeah, I think it's a really interesting concept. It was episode 16 of this podcast, and I think this is probably so I think we're in the high 90s for this episode with Mike, and it's still one of the most fascinating episodes for me personally, that many episodes later. And it was with a woman, Merla Vanden Acker. She was a PhD student from Warwick University. I probably referenced this episode like every 10th episode since then. But it's a really great listen back for folks. And she talks about people's philosophical, emotional response to money, and how what we've been talking about, Mike, again, going back to the whole security thing, right? If we tell members, hey, you know what? We have this all covered. Don't even worry about it. Don't even think about security. We've got this covered for you. And then, you know what? Even if it goes south and you're talking to somebody at a coffee shop and they swindle you into giving your, online banking username and password, and then they have you sit there and you set up an external recipient to them and you transfer your life savings to them. Don't worry about it. We'll protect you. We'll cover that loss. Where's the incentive for that person to even try? So when they do get that email with the malicious, phishing link in it, they're like, who cares? It might be fraud, but even if it is, my credit union's going to cover it. It's no big deal, right? Or, hey, you know what? It's no big deal. I just keep swiping this card until finally the credit union calls me and says, you've had 37 NSFs, but don't worry about it. We're going to cover you. As soon as they're covered, next month, swiping right away again, And so there does have to be some level of guardrails when our kind of guiding light as a community financial institution, especially not for profit and a credit union, a part of our mandate is, I hate to say it, but to put some guardrails up for stupidity.
It's stewardship. And,
totally.
Stewardship
it's a great way to put it, man.
It's not about saying yes to everything. It's sometimes that you do have to say yes, but, and sometimes that you have to say no. And is it for the good of the community? Is it for the health of the financial cooperative? Is it for the good of the member? Those are lenses that, I think regardless if you're in a credit union or in any business, that those are the lenses that you should look things through. Yes, companies should make money, absolutely. But, again, when it gets into the predatory side of things, it's how are you making money? What's the next effect to that? If we're just covering everything, if the risk is all on the FI, if the risk is all on the retailer, and it's not, on the consumer, well, then where's that money going, and what's that money being used for? I mean, it's nothing good. I've never heard of, a criminal enterprise advertising, here's all of our philanthropic things that, we do. Homeless kids too, with all the money that we stole from these rich people. It's not Robin Hood. It's not, I assume. So, again, there's a cause and effect to everything. And again, I think it just goes back to that balance, not equilibrium, but stewardship is about doing the best right thing that you can do for all of the parties involved. It's simple language as that.
That's such a good way to put it. And for those of you that are listening, we just briefly touched on this subject before we started recording, and Mike, I'd love for you to reiterate the analogy of, again, we're bringing everything back to skiing apparently, but,
we didn't go mountain biking.
Yeah. Wait, you go to the ski lodge, right? And you're like, oh man, the hot dog's $8. Is it really $8 for a hot dog? And you're like, oh, you know what? This is helping subsidize that, I bought a lift pass that was shared with another mountain. And so I'm actually kind of here free, and this is how they're going to make their money to stay in business. And so therefore I want to support that. and you're like, you know what? Like, is that predatory hot dog selling? Not really, right? But it's, yes, they're marking it up more than it's probably getting marked up at the grocery store or, somewhere else. But it's because that's how they, are making some of the revenue to stay in business so you can go partake in their business. But if you go to a ski hill and they're like, yeah, this is a $97 hot dog, you're like, okay, now you guys just have a really crappy business model. Y'all are really operationally inefficient. So I think that ties back to kind of similarly what you were saying with, hey, if your credit union is so incredibly reliant on NSF fees, I'm sorry, but you have a problem, right?
Yes, you have a business.
You have a problem. You need to be operationally efficient, so you don't need to rely on that kind of income, right? But at the same time, yes, there's some, hey, you know what? That is a way that we can generate revenue and at the same time incentivize good behavior. But yes, there sometimes needs to be some regulation in place to say, there are some good actors and bad actors, and y'all are being bad actors. And that is a junk fee. That is predatory. That's not okay. You can't do that. Knock it off. But balance. It just comes down to balance.
Yeah, and it's, the ski resort analogy, average, individual pass for, a season pass at a ski resort, on the East Coast, $500, $600, something like that. Where, they're banking on, okay, well, if you're just skiing a couple days, hey, you're just going to reduce the price of that $150 day ticket down. But if you're somebody like us who skis all the time, I ski 45 days a season at one resort. And that one resort, again, what does that break down per day? I have no idea, but I know it's not enough to pay all of the operational people to make the snow, because we're in the Mid-Atlantic, to run, to run the lifts, to run F&B and everything else. And so, what you get in that particular example is you get expensive F&B, food and beverage. $8 can be cheap, depending on a ski resort. Someplace I've seen hot dogs $17. And again, it makes you question, okay, what are you doing with your operations if you have to charge $17 for it? But again, it's they want us to come. They want us to spend money. And the more efficient the operation, the better the experience is, really. There are independent resorts out there, not on Icon, not on, Epic, that, they can deliver a better experience than the big resorts can, because they have to be operationally efficient, because it's the only way they survive. There's power in that struggle. So it's again, balance. Yeah, just don't name this thing, Mike defends NSFs. That would not be.
The episode summary is, yeah. Mike loves regulation and thinks that NSF fees are the best thing since sliced bread. Yeah, got it. Okay,
yeah,
we'll take note. Yeah.
That would not be great.
Yeah, but no, it's just, I think you summed it up so perfectly, Mike. It really is. It's, so many things in life, whether it's skiing, whether it's business, and especially if we're running operations at a credit union that's trying to provide value to the members that it serves, it's really about having, that appropriate risk tolerance for what you're doing to make sure that you're continuing to evolve to provide value, right?
Yep.
And it's just being conscientious about that, about having balance, about being okay with some shifts, being prepared to pivot, and building a culture around that. So, hopefully everybody else is sitting here having the same realization that I have, but I started your intro with 5 minutes into meeting you the first time, I knew you had to be a guest, and I was really looking forward to this, and this was exactly why. It's just an absolutely fascinating conversation. I really appreciate the ability that you have to take, we've covered actually some fairly complex topics throughout this, but bringing it down into some really fun, silly analogies, but it really helped to paint a really accurate picture in my head of kind of, how you think about things. And I think it's really, really cool to see people like you in your role at credit unions, because it gives me a really high confidence that my kids are going to bank at credit unions and community banks and institutions that really and truly care about providing value to them. So I really appreciate you taking the time to be here on the podcast with me, Mike.
Hey, absolutely. This was fun for me too. Again, I really appreciate everything that you said. I've gotten just as much value out of this conversation that I think you have. You're just articulating a little bit better than I am. So, but also I'm on the East Coast, so it is dinner time.
Yeah, no, actually, it's dinner time, man. Seriously, thank you so much for coming to being a guest on the Digital Banking Podcast, Mike.
Absolutely. Thank you.
Thank you for listening to the Digital Banking Podcast powered by Typhone. Find more episodes on digitalbankingpodcast.com or subscribe on Apple Podcasts or wherever you get your favorite podcasts.